Treasury yields remain near record lows, with the 10-year holding steady near 0.7%. Zach Griffiths is a rate strategist at Wells Fargo. He is joining us now. Thank you so much for being with us today. Should we expect rates to go even further? I mean, we've got the 10-year yield at 0.7%. How much lower are we going to go, do you think?
So we think the 10-year yield will actually rise a bit from here. We target around 0.8% over the next month or so, and we really look for the curve to steepen just a bit, with the front end remaining anchored by Fed policy that is extremely easy right now, and we expect it to remain that way for quite a long time at this point.
Zach, I'm getting worried about the stresses I'm starting to see and hear about in the commercial paper market. What are you seeing? What are you hearing?
Yeah, we're definitely seeing stress there, and that is a bit concerning in the way that it impacts other funding markets in the front end, and you're definitely seeing a widespread of funding stress. So we think that's something the Fed may be looking at to address. Back in 2008, they did a commercial paper purchase facility. We didn't hear anything about that with the measures announced Sunday night, so maybe it's not at the top of the Fed's mind, but as they see some of the measures they've taken not really addressing all of the issues in the market, maybe that leads them to think down that road at this point.
So then what more could and should the Fed be doing right now to relieve pressure there?
I do think the commercial paper facility is something they should take a look at and could be effective. Outside of that, they've really done as much as they can do with some of these measures with repo, with asset purchases. And I think the key thing with these asset purchases they're doing is they've left themselves a lot of room to be nimble. They're announcing purchases for the next day at 4:30 the prior day. So if they're seeing the amount they're doing not being effective enough, then they can adjust the amount and do more the next day. And I think that's really the point, and the key takeaway is that they know these are very volatile times, and they're going to do what they need to do to address it and change their thinking on a daily basis as necessary.
Zach, are you in that camp where the thinking is the Fed is out of bullets and they can't do anything more, and that's part of what has caused the steep market sell-off, especially yesterday?
I don't think they're completely out of bullets. I think it's probably a little bit disappointing to see how the market responded to this initial very sizable move, but there's always more they can do with asset purchases. Again, going back to that commercial paper facility, that's something they can look at. So I don't think they're completely out, but to see the market respond that way to such a large move is probably a bit disheartening. But we think these measures are going to take some time to really have the desired impact, and we're starting to see a little bit of that this morning.
Zach, Jerome Powell has downplayed any interest in having negative rates. Do you think that should be the next action?
We do not think negative rates make sense, and we don't expect them to do that. They've been very adamant about the fact they've looked at negative rates during the financial crisis, and they've, I suppose, considered them or potentially have come back up in conversations with what's going on with the coronavirus, but they've been very clear that that is not a policy measure they expect to take, and we don't expect them or think they should do that either.
And Zach, with rates back near zero, what are the implications for the currency markets and for the U.S. dollar in particular?
So given all these different measures, we think that there could be some short-term weakness in the U.S. dollar, but we do expect it to remain pretty constructive over the longer term or even the medium term, as the risk-off sentiment should drive demand for dollars.
All right, we'll leave it there. Zach Griffiths, I know it's been a busy week for you. We frequently exchange emails. Always appreciate the insights.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.